Now, the second approach involves zeroing out any balances that may exist. Remember when I said those balances that carried forward from the prior year? Well, we're going to zero them out. We had a balance of 45,000 in underbillings and a balance of 23,000 in overbillings. Well, I'm going to credit that underbillings so that we're left with zero, and I'm going to debit that overbillings by 23,000, so we have a zero balance in overbillings as well. Just like in the previous entry, there is an entry to revenue over under to balance that entry. We decreased underbillings, which decreases revenue. We decreased overbillings, which increases revenue. So there's a net change of $22,000. That's a total decrease in revenue. Now we technically start off with zero balances and under overbillings. So what we do is we record a debit, an increase from 0 to 23,200. We have an increase of 23,200 to underbillings. Going from 0 in overbillings to 36,000 is a credit to overbillings for that amount. The net difference there is 13,643. Now, when we incorporate both journal entries, which I've done here, I've got the first journal entry here that credit 45,000 on down the line, and then this is the next set of journal entries to record the current month WIP. This is a sum of all the journal entries I made. You'll notice that it's the exact same thing as if we didn't reverse out any existing balances. Underbillings is 23,200, overbillings is 36,843, and this revenue over under account is a debit of 35,643. So no matter what approach you take, you'll end up with the same answer. I prefer to just use whatever the existing balance is to calculate the current adjustment. Saves that extra journal entry of reversing out any prior or existing balances. I hope that was helpful. Hope to see you again in the next lesson. Thanks for tuning in. In today's lesson, we're going to cover two different approaches to recording WIP. The first one is to incorporate existing balances into the calculation of the adjustment, which I'll go into further detail in a bit. The second is to zero out any existing balance to then record the current month's WIP. The reason why I'm doing this is to show you that it doesn't matter which approach you use, as long as you're comfortable with it. So let's get to it. We've got the January WIP schedule here. We also have the relevant trial balance information here. Underbillings are an asset, overbillings are a liability. This is the offset, which is an income statement account. As you can see here, the unadjusted balance already includes an amount. That's 45,000 for underbillings, overbillings 23,000. This is rolling from the prior year. Balance sheet accounts do not close out to retain earnings. They roll forward into the next year. Different story for income statement accounts, like this one. It closed out to retain earnings, so we should be starting off with a zero balance in the following year. Now, our WIP for January shows 23,200 in underbillings and overbillings of 36,843. Well, we have balances in those accounts already in the trial balance. We want to adjust these balances to reflect the current amounts on the January WIP. So 23,200 is the new amount. We had 45,000 there already. So what do we need to do to this 45,000? We need to credit it by 21,800. That's just the difference between the two amounts. So we decrease it by 21,800, leaving us with an adjusted balance of 23,200. That ties to this amount here. Now, overbillings, we had a balance of 23,000, a credit balance, and now it's 36,843. That increased 23,000 to 36,000. Increase in liabilities is a credit. So in order to move the balance from this amount to this, we credit it by 13,843, which once we do that, we get 36,843, which agrees to this amount here. The remaining entry is just a quote-unquote plug to revenue over under. That's what balances the entry. We decreased revenue by decreasing the underbilling. We also decreased revenue by increasing the overbilling. So the total is a decrease to revenue, a debit of 35,643. That's reflected over here in the adjusted balances for January.